Hello, bit of a recall on this one. It didn't work the first time around, so just go through the first slide again. So disposals of non-current assets. So a topic that I think I could teach so many times and people still want to revise the end of A2. So I was like, oh, can we just check disposals? Which is fair enough. It is awkward, but it is all about step-by-step systematic. If you get your approach, I mean, we'll try to do a flow chart here demonstrating that approach. If you get this right, you're there. I know that's making it sound easy and it isn't, but it can be done. So if we look at it, disposals, you really need 3 tier accounts. So you're going to set up a disposals tier account. Now that could be irrespective of what you need, just because it helps you. That's your temporary account. That is purely there to work out the profit or loss and disposal. Once we've done that, we'll have disposals, we'll have the non-current asset account for the group of assets that has been disposed of, and the depreciation for those assets as well. And then what we do is we enter each individual part. So the first thing we need to do is clear the non-current asset from the cost account because we no longer own that asset, so it needs to go. So assets go up on the debit. So we're going to credit the non-current asset account with the label disposals to show that we've disposed of one of those assets. And then the corresponding debit goes into the disposals T account with the label, whatever the asset would be, vehicles, equipment. Please try not to put cost account. Lots of people have done, and you're not going to get a mark for that. So we show that we've cleared that type of asset from the accounts. We then have the accumulated or provision for depreciation. Apologies for using slightly different language. There's so many different ways of saying the same thing in accounts. And so again, depreciation goes up on the credit. So to dispose and clear all the depreciation on the disposed asset, we're going to have to debit it. So we'll put a debit entry on the provision for depreciation with the label disposals, and then that will then credit on the disposals account with the label depreciation. This then means there is no entry for that asset anymore in the accounts, and that is our ambition, is that it's no longer recorded within the accounts. Once we've done that, that's in the bottom half of the flowing chart, we've got the proceeds on disposal. Now the question we're going to work through is on a part exchange, which is a little bit more awkward. It's really not too bad, but people get a bit confused with. This is just going through if we receive any money. So we would debit the bank always if we receive any money and credit disposals. So on the debit on the bank account, it would label disposals just to show you where that money came from. And in the disposals account on the credit side, it would label bank just to show you received money to sell that asset. Once we've done that, the balancing entry on the T account will be income statement. You cannot have a carry down unbrought down on the disposals account, and that will be the income statement, profit or loss and disposal. We would also balance off the cost account and the depreciation account, which we'll look at with the question on the next slide. But in the disposals, if we have a credit entry in the disposals T account, we label the income statement. That means it will be a debit in the income statement T account. That means we've made a loss on disposal. That means that we have received less than the net book value of the asset, which is why we've made a loss. And it also, as it says on the slide, means we've underprovided for depreciation. So we didn't think it would fall in value that much. But depreciation is an estimate, so it's quite easy to get wrong. However, if we've got a debit on the disposals account, so we'll label the income statement, that would be a credit in the income statement account, and that would be labeled profit on disposal. Please make sure in the income statement that you put loss or profit on disposal, whichever one it might be. Profit on disposal goes in any other income, loss on disposal is an expense. This means we've over provided for depreciation, so we've charged too much depreciation, so actually the net book value has fallen too much and we've received more money, so I've made a profit on disposal. So label the entries right, but let's have a look at the T accounts in the next bit. So this is one of the more involved exam questions that's come up. So this is from an AS paper, so AS May 2020, it might come up as June 2020 if you look it up. Question 12.1. Obviously, if you consider what year that was, you can see why that can sometimes have some issues, but it's a 2020 paper, AS, and we've got quite a lot happening here. So we've got a sole trader, they've got the following information. So they've got the extract of the motor vans that they own. So they've got a cost value of £72,000. That would be a debit. They have accumulated depreciation of £34,875. That's a credit. Net book value of £37,125. The net book value is not a T account. So sometimes students don't read this question properly and start putting the net book value in the accounts. That is not obviously the way to go. I'm just going to get a highlighter. So what we have here we're going to look at this. We've part exchanged a van to buy a new one. Now, part exchange, people get worried about. It's not really that much different to selling it on cash. It's just instead of having a label for bank, we're going to have a label for the asset you're part exchanging it for. We'll look at that in the mark scheme in a moment. So the old van had originally cost 24,000. So the first thing we're going to do is clear the value of 24,000 from our cost account against the disposals. At that moment in time, we had accumulated depreciation of 13,875. So again, we've got to clear that. Just tick each item off. You're getting marks for each item. I mean, effectively, you're going to get marks for entering these opening balances as well. We were given an allowance of 8,000. So instead of being given any money, we were given a part exchange figure of 8,000. So that means on the cost account, we'll have a disposals entry for 8,000 to reflect the fact that we've used the old asset as a part exchange against a new one. The new van cost 28,000 and the balance was paid by cheque. Lots of students get 0 on this, and they really don't need to if you carefully check the questions. So the 8,000 disposals, so it cost 28,000, so we have paid 20,000 from the bank. So we'll have disposals 8, bank 20, and that allows for the fact that new asset has been added to the non-current assets. Please use the correct labels. It would have to be bank and disposals. It wouldn't be additions, which I've seen numerous times over the years. That isn't a T account. You've got to think of your label. There should be an opposite T account with that name. We've also got here the depreciation policy. So we've got a reducing balance and it's 25%. No depreciation in the year of disposal. And a full year's is charged on any assets owned at the end of the year. So we've got our normal things. So disposals, we won't calculate any depreciation on the asset that we've sold, but we will for the new one that we purchased for 28,000. So lots of stages and steps to go through. We'll talk through the question. Let's see how the solution works and talk through why it is or what it is. Okay, so this is the mark scheme. So we said the opening balance was 72,000 in the cost account. So we've got a balance brought down to 72,000 in the cost account. That's going to gain us 1 mark. We already said we're going to put bank 20,000 because that was the balance of the 28,000 that was paid. We're going to get 1 mark for doing that. We've said we disposed of an asset for 8,000. We're going to get a mark for doing that. We cleared the cost of 24,000 of that asset there. We've got 1 mark for that. We then get 1 mark for balancing off our cost account. So as long as that's mathematically correct, if you'd forgotten one of these entries, you can still gain that mark. Because how systematic and nice this is to gain marks. If you just enter everything correctly, you're gaining and ticking marks across. So even if you're not 100%, you're still going to get a reasonable 7 or 8 out of 11 on this, which is it's a tough question. So that's a good achievement. We're looking here, the entries must be on the correct side, have an appropriate label. Like I said before, the label is really important. This label should refer to the other account involved in transaction, not description. We've said this, e.g. the debit entry of 8,000 should refer to disposal and not part exchange. That's a fair point. Sometimes students will write part exchange as the label. There's no account called part exchange. We can't give you a mark for that. For the disposals account, except disp account, it's okay. Shorthand's okay. For me, I'd write disposals. What time are you saving? The mark for the balance brought down is for the balancing process. We can't have any extraneous items. So yeah, any alien items. If you put depreciation, for instance, in the cost account, what is going on? And you're not going to get the balancing figure, the balance brought down figure for own figure. The depreciation account, we have an opening balance of 34,875. Like I said before, just be careful. Don't put the net book value. We get 1 mark for putting that on the credit side. We were told that the asset had been depreciated by 13,875, so there was no major work to do there. So you're going to gain a mark for just putting it on the debit side. And then what we've got here is the income statement entry. Now, the provision for depreciation T account has, I don't think has ever come out individually on an A2 paper. So this is good to see the presentation of this T account and what we'll do. The income statement figure is usually the most marks. So in here, it's worth 3 marks. On the next slide, I'll show you the workings to get to the 13,750. But putting it in the right T account is worth 1 mark. And so we will look at that in a moment. The balance brought down again is an own figure mark. You can get 1 mark for doing that. It's 34,750. But if you didn't have anything extraneous, again, you could gain a own figure mark. If there is no acceptable label and there is a correct depreciation figure of 13,750, you can still get 2 marks. So if you hadn't labelled it income statement, if you labelled it depreciation, which I've seen before, you could still get 2. But really, why are you doing that? Get your labels right. So 13,750. If there's some workings there as well that supports that figure, again, you can gain 2 marks. Let's have a look at some of these workings for the depreciation especially. So if we look at the depreciation, to get there, the first thing we've got to review is it's got to be based on that cost value of 76,000. So it's using that figure from the previous question. Now it doesn't actually say this, but predominantly that would be own figure. So if you had calculated 76,000 incorrectly in the cost account, they can't penalise you twice. So they would have to use the balance brought down figure. The depreciation, this is the extra Brucey bonus mark that you can gain. You can use the 34,875. You would still gain a mark down here. So for this bit here, but you will lose this extra because the depreciation on the disposed asset has to be cleared. So you've cleared the cost here, so you need to clear the depreciation here. So effectively, the depreciation T account has got 34,875 on the credit at this point in time, 13,875 on the debit, so the net balance is 21,000. So we can then calculate the new net book value, which is 76 take away 21, which is 55,000, and the depreciation is 13,750, being 25% of that number. I've seen that be 4 marks before, but obviously it's 3 marks in this particular one, because sometimes you get a mark for the net book value figure as well. But you've got to remember to put that on the credit side of the provision for depreciation T account with the label income statement. You can present your figures here like this, so you can work out the existing and the new motor van. Absolutely fine, just do 25% of them. That's not a problem at all. So clear the net book value of the disposed asset. For me, the top method for W1 is the most logical one. But whichever way works for you, you've got to get the right figure. Now, part of the question was not to calculate the profit or loss on disposal, but I think it would be silly not to look at that at this stage because we are reviewing disposals. So my lovely, sophisticated handwritten disposals T account. So we can see we cleared the van, 24,000. So that credited the van account, it will debit disposals. We received 8,000 for that van. So instead of having bank as a label, we're going to have van because that's how we paid for that new van. We cleared 13,875 worth of depreciation, as we had said previously, so debit depreciation will credit the disposals. That only leaves us with a balancing figure. So that balancing figure goes to the income statement, 2,125. Because it's on the credit, that means it's on the debit of the income statement, which means it's a loss on disposal. So it would be an expense. Okay, I hope that helps. Thank you.